Everyone, Double P here. So what I'm going to do today is I'm going to go over a little bit of a tutorial with support and resistance. So we'll do support and resistance from long term, support and resistance from short term, and support and resistance intraday, so that you can kind of see the difference and what you need to look for. And from there, you'll be able to position yourself either as if you want to be a long term type of investor, or you want to be like a trend trader, or if you want to be a position trader, short term, a month to 3 months, or you want to be a momentum type of a trader, so you're looking at anywhere from a couple of weeks. Or if you want to be an intraday trader, which is you're in and out before you're in at the cash open and you're out before the bell closes. That's what an intraday is. Okay, so let's kind of break it down. What is support and resistance? So support and resistance literally is a stock will cycle A stock will cycle anywhere from, on an intraday basis, anywhere from 12 to 15 times, where it's going to ebb and flow when it's a position. If you're looking at a daily or a weekly type of a chart, you're going to have the same type of a cycling situation where it's going to have a bottom, then it's going to have a top, or it could be trending. If you're looking at a long term, then you're looking at support and resistance from a wide data range. So you're going to be looking at either the reactionary low and to the reactionary high, and then you're going to be basing your data on those 2 points and looking at taking a long-term trade. So you're looking at where would be a good support level for a position for a stock, or where would be a good resistance point to be thinking about either taking a trade from the short. So you're looking at shorting a stock and then catching that waterfall trade, so the stock is going down, or you're going to be taking it from the bottom, so it's oversold, it's bottomed out, and you don't think it can go any lower. So it might be a good position for you to get in there and take a long-term buy and let the stock ride back up. So there's a couple different tools we want to look at. But first thing we're going to look at is we're going to look at support and resistance from a price level, because as we all know, price is king. And price is literally one of the major determining factors as to where a stock is going to go. So whether it's going up, whether it's going down, whether it's sitting in a consolidation type of a phase. So support and resistance, what I would say is support and resistance. If you want to do a long term, we're gonna go back here. We'll go to a 2-year weekly, because at the end of the day, so this is how this works. So the hourly chart trumps the intraday chart, which would be anywhere from 2-minute, 5-minute, 10-minute. The daily chart trumps the hourly chart. The weekly chart trumps the daily chart. The monthly chart trumps the weekly chart, and etc., etc., etc. So you're looking at taking positions. So we're going to go back. As you can see here, we're going to go back to a 2-year weekly. So we're going to look at this from a buy and hold, sort of a investor type of perspective. So if you wanted to look at this chart here, we're going to map out support and resistance levels. So we can look at this and we got to say, okay, where are highs and where are lows? So let me map this out here for you. We'll take it from the low, from a price action level for support and resistance. And let me look and see where the highs was. And I'm going to take the wicks because that was the high, which was the wick. I'm not taking the body of the candle. And now we got to find levels. So where are good levels? So let's look at this level right here. That seems to be a good level on the weekly. Yep. Where's another level that we can go to? So let me show you what I'm actually looking at for support and resistance. And this will all make sense to you in a second. Okay. So I'm using Microsoft because it does move around quite a bit. It's a fast mega cap. It's a beta. It's fast beta weighted. So there's going to be a lot of volatility. So one of the things you want to do when you're looking at support and resistance is you want to have an element of volatility in there. If you don't have volatility in there, your position, if you're looking at taking it from an intraday basis, a daily basis, like a swing trader, position type trader, you're not going to get a lot of movement in the position. And you want that movement because you want to get that ebb and you want to get that flow. As a long-term investor, obviously, what are you looking at? Well, you don't want the stock to go sideways, right? You don't want the stock to do this, where it just sits there and just does this, because to you as a long-term investor, that does you nothing, right? Because eventually, what's going to happen is one or two things are going to happen. It's going to peter along like this. It's not doing anything. And all of a sudden, this might happen. Or this might happen, but you don't want to be taking that chance. So you want a little bit of volatility, or a lot of volatility, because you want to be able to capture those upsides, and you want to be able to neutralize those downsides by either hedging, or you want to be able to get rid of your position and come back to it at a later date if you've made profits. If you're doing what's considered going on the short side because you went long, then that's another ball game in and of itself. So for now, support and resistance is basically where's the low on Microsoft on the last 2 years on a weekly. You can see the low right here. So in this position right here, based on volatility, you would want to say to yourself, excuse me there, I got a little bit of a cold. You'd want to say to yourself as a long-term investor, well, this would be a really good spot for me to get into, because this stock, if you're looking at it, the stock had bottomed out. It went from a high all the way up here at the 351.25 back in November 2022, all the way down to here to where it is right now, to a low of 213.43. So it made quite a substantial drop, almost $125 drop, right? Give or take. So you want to look at that and say to yourself, wow, okay, from a support and resistance type of a standpoint, this could be support for me to get in now, because what's going to happen now is the stock is going to start to repair itself. Stocks will go up and stocks will come back down just as fast. And sometimes when they go up and they come back down, they may not come back up. Or when they go up and they come back down, they may start to repair themselves depending on the type of equity it is. And it'll start to repair itself. It might take a while, but it'll start to repair itself and it'll start to come back up to AKA its former glory, or try to fight its way back up to another high. Excuse me. So when we're looking at this here, this would be a good support level if you were looking at taking this from a long-term trade angle, or a long-term investor, you'd be looking at getting in right around here, because now there's very little downside for you to be taking. Where's all the risk? Well, the risk now is going to be to the upside, because there's very little risk especially with a stock like Microsoft, where it's down here at 212.84. Of course, we can go back a couple more years and see where the true support, like another support level, is. But for now, on a 2-year weekly chart, I mean, this is pretty good. A really good foundation for you to start if you're a long-term investor, to say to yourself, you know what? I think I'm going to get in here at this point at the low right here, and I'm going to sit, I'm going to buy some shares, and I'm just going to walk away. Basically, you're not going to worry about the day-to-day. You're not going to be worrying about intraday. You're not going to be scared with headlines unless there's like a major catastrophe, like the CEO was caught embezzling money or whatnot. But other than that, I mean, literally, you're not going to be looking at it and glued to your screen on a minute-by-minute basis. Of course, you're going to be looking at news occasionally, but unless there's something, a major, huge catalyst, you're not going to be too worried about getting in at this position at 213.43. So this is support. So this is where the stock has bottomed. How many times did it hit 213.43? Well, this was the low right here. So it came close on this candle right here, and it came close on this candle right here, but that was the bottom right there. So you can get in on this entry point right here, and now you say to yourself, okay, if I want to be a long-term investor, but I kind of wanted to be in, I don't want to be holding it for a year, where would be one of my positions, or where would I want to get out? Well, from 212.83 or 82, your next price point level, or your next support or resistance level, would be 246.04, because resistance now is there's a lot of overhead supply. So what happens now is there's a lot of selling pressure at the very top. There's a lot of liquidity at the top. So for Microsoft to push through or break through that ceiling, it's got to get past this 246.04 level, right? So you can see at one point this was resistance. So there's resistance here, resistance here, resistance here, 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 here. So quite a few times there was resistance where Microsoft was just banging its head against 246.04, and it just couldn't break out there, right? So you can see the chunk right here quite a few times, right? So that was resistance. So you say to yourself, okay, if I get in at 212.82, then my profit taking right now, I'm looking at going out and taking a 246.04. So you're looking about $32 for your profit taking, which is pretty good. So I mean, depending on the type of shares that you're getting, this could be a really good hold position for you to be able to get into this spot right here at 212.43 and then getting out at 246. So if you got in here, what would be your price taking or your profit taking? Well, you'd be looking at on the 11th, right? But you're a long-term investor, so you're thinking maybe I want to hold. So you're looking at maybe watching what's going on, and you might be looking at getting out on 11/28. So that gives you almost a month of sitting in a position, looking at Microsoft and looking at taking some profits, because as you can see, that's past resistance, and then back down here, Microsoft kind of slid down, right, and went right almost back to the point where, you know, this would be your stop right here at your stop right there would be like at 219, because you got in at 213, roughly around there, or 215. So I mean, you'd want to say to yourself, okay, well, if you're going to hold for a little bit more than a month or so, then you're looking at, well, what happened to this candle right down here? We went down to 219. So you might be thinking to yourself, well, 213, 219, that's a $6 move. I can take a $6 profit. Give me a quick second here. So you wanted to look at that and say to yourself, okay, that would be a kind of a stop for me, because a $6 gain is better than going back to break even, and you're not breaking even because you have to pay commissions to get into the trade, right? And you have to pay brokerage fees. So you have to be very mindful of, if you're going to take a 219, if you're taking a $6 profit, but you're not really taking a $6 profit. You got to minus your brokerage fees on the in trade and on the exit. Right? So then you might be thinking, okay, well, as a long-term investor, I want to sit and I want to hold. Where's the next entry point? Where's the next resistance? Is 291.58. I mean, we could easily draw another support and resistance level, which would be right around here, 267.25, because you can see how many times that resistance that the Microsoft stock bounced off of it and couldn't break through it. And then all of a sudden right here, you see a little bit of support, right? And then right back here, you see resistance once again, big mighty candle broken through there. But that could be another resistance point for you and a support level for you to be looking at. So you can be looking at 291.58 to be getting out. So from here, 213 to 298, that's quite the movement. So let me break out my calculator here so I can really do this properly. So 291.58 minus 213.82. So you're looking around a $77. Sorry there. When you have family members knocking on your door, you kind of have to look at the situation. So that's a good $77 movement right there. Let me just move this out of the way so I can get at that later. So that would be a good movement for you from a support and resistance level as a long-term investor, not a buy and hold, I'm saying a long-term investor, or even as a trend trader. Now, if you're a trend trader, what you want to be doing is you want to be looking at the price action from this level, where's the overall trend? So as a trend trader, what are you looking for as part of your support and resistance? Well, as a trend trader, you're looking at moving averages, because moving averages are going to help you to be able to figure out when to get into a position and when to get out of a position. So when you're using movement averages now and you're looking at support and resistance using price action, that's a deadly effective combination, because now what you can do is you can look at your support and your resistance based on the moving averages. And this is going to help you when to get into a trade and when to get out of a trade. So over here, we have the 200 moving average, and this is on a weekly time frame. So it's a 200 weekly. Sorry. And then we have a 20 moving average on the weekly time frame. Now, what you want to be looking at here is, if you were looking at, this would be your first line of support. This would be your second line of support or resistance, and this would be your third line of support and resistance. So the 200 would be your secondary, the 20 would be your first, but then you have horizontal price action as well to couple up to make sure that as the position is moving up on a weekly basis, you can see here how it's tightly hugging the 20. So you would look at that and you would say to yourself, okay, am I going to get out of this position when it crosses under the 20 but it's still above the 200? Or am I going to get out of the position when it crosses under the 20 and I want to get out of the position? And I want to look at it, getting back into it as a trend type of position, because the trend is now in my favor once again. So if you're looking at being a trend trader and you're going on the up position right here, well, where's going to be your exit? Your exit is going to be right here when the position turns under the 20 for that 1, 2, 3, 4, 5, for 6 weeks, right? You can see that here under the 20, but it's still above the 200. So if you're looking at still staying into the trade above the 200, you still stay in it, and you still be in it until it got out right here as a trend trade. But with a trend trade type of a position, you want to be hugging it on the 20, and when it goes under the 20, this would be your bailout right there. So that would be a great trade for you as a trend trader. So that would have been a position where you take it from the 6th, from June 28th all the way up until, August the 30th. So that's a pretty good move right there. That's a pretty good trend trade, staying in that trend until the trend is broken under the 20. So that would be for a trend type of a trader. Now, let's just say you were a position type of a trader. What would you be doing with support and resistance as a position type of trader? So as a position type of a trader, you want to be saying to yourself, okay, not only am I looking at the price levels, I'm also looking at the moving averages. So now I want to see what is their retracement. So what do we do here? We are going to come in here and we're going to look at Fibonacci retracements, because as a position type of a trader, you want to be getting in at certain positions, and most likely you want to be looking at taking Fibonacci, looking at Fibonacci retracements or extensions. So you want to be looking at when to get in and out of a position as a position type of a trader. So with Fibonacci, what we're going to be doing is we're going to look at taking it from a reactionary low to a cautionary high. And then from there, you be able to look at where you want to take your position. So let me get rid of these price levels because I don't want the chart to get too messed up. So let me remove this level right here, because you guys got the levels, so you know what the levels are. And from here, now you want to look at from a low to a high, or we can do a high to a low. So let me get rid of this. So from here, as a position type of a trader now, if you're looking at being a bearish type of a position trader, you'd want to wait now, because now you're looking at taking this position from the 88% mark. You're walking the stock up to the 0 mark. So now you have to say to yourself, okay, this hit a high here, and it's a nice blood red candle. What do I want to do now? I want to be able to take a position. So you see this position right here. You don't want to be looking at it and says, okay, I'm thinking about going bearish now because it ran up. Microsoft ran up from June all the way up to November. So that was a good, what was that? 1, 2, 3, 4, 5, almost 6 month move. Now it's going to the downside. So I want to be looking at taking a position using my price action, right? We're using my price levels. Where was the price levels we're looking at? 291. Remember that price point, 291? So we had a price on 335. So 335, one of the tops. And here was 347. So at 335, because remember that was one of our price resistance levels. As a position type of a trader on a bearish trend going down, you want to be looking at this level here. When is Microsoft going to break that level after it hit that high? When is it going to break through? So you want to be patient and you want to wait. You want to wait. You want to wait. Right here on this big Maribozo candle right here, this big blood red candle, that's when you say to yourself, okay, now I'm going to take my position as a position trader, and I'm going to walk this stock down now, because now you see not only is it under the 20, which is what you want, because you can see here I have this color coded, it's green, then all of a sudden it turns yellow, which is going into negative territory, and you see the slope, right? That slope of the 20 is pushing Microsoft down on a weekly. So you see that big blood red candle. Now you want to take that position, get in on a position trade. So you're looking at 1 week, 2 weeks, 3 weeks, 4 weeks, 5, 6, 7, 8, 9, 10. 10-week trade as a position type of a trader to get in on this big blood red candle and walking it because the 20 is dominant. You're following the 20 right here, and you're looking at, okay, it's under the 20, it's under the 20, it's under the 20, under the 20, under the 20. Here we go, here we go, here we go. And right there. Did it break out there? Yeah, but what is this right here? This is a big sell side candle as well. This is almost like an inverted hammer pushing the stock down, and it's going down right here. So you're looking at taking 76% from 0 to 76% retracement. So after the 50%, what you should be doing is looking at the 50%, because if you can hit 50%, then you can say to yourself, I'm looking at taking half or 50% off of my position right there in the 50%. And then the rest is going to be gravy, 61, 76%. That's when you're looking at taking a lot off the table, because you see the reversal right here. So as a position type of a trader, that's support and resistance using the price action, using the price level tools, using the moving averages, and using Fibonacci retracement. Now, if you're saying, well, double P, I'm an intraday or I'm a momentum type of a trader, no problem. So let's come down here as an intraday, and we'll go on a 5-minute candle where you can say to yourself, okay, do the laws still apply on an intraday basis? The laws do apply on an intraday basis, because what we're going to do is we're going to shrink this up so you can see the whole entire screen. So here's your support and your resistance levels. Now we can do on intraday basis. Now we can use Fibonacci retracements, Fibonacci extensions. I know you may say, a lot of people say Fibonacci is mid to long-term type of a tool, but if you know how to use it properly, you can use Fibonacci retracements and extensions on an intraday basis where you're actually using it to scalp. So let's take Fibonacci retracements. Let's take a Fibonacci retracement from a high right here if you were scalping and you were scalping on the downside, you're looking at getting out at 50%, taking profit. Then you're looking at carrying this all the way down to the 0 point, which is right there. Look at that movement there. Look at those two big blood red candles. That's exactly what you want to see. Is it under the 20? Absolutely. So you're staying in that trade because it's under the 20. Where's the reversal? Well, the reversal is right here. So you want to be able to get out right there, taking your last bit of your profit on the 20. You see the 200 right here moving up. So as an intraday trader, that's where you'd want to be looking at a Fibonacci retracement, looking at taking that profit. That's a huge amount of profits. Now, let's get out of the Fibonacci retracement and let's go with Fibonacci extensions so you can see the exact same thing. So with Fibonacci extensions, we're looking at a high to a low to a high, and then now you're going to say to yourself, okay, So where do we go from here with the Fibonacci extension? Now I could do this way, and I can do another way. So we can go from a high to a low to a high, or we can go from a low to a high to a low. So I'm just doing it from this perspective right here. Still, as a short, you want to be looking at this and saying to yourself, okay, there's the top of that candle right there. There was the low. There was the high. I want a short because I want to be in a short position. Well, where are we looking at? 50%. That's a great short right there. What's that price level? 330 is your price level. Let's look at the price action. Let's look at the price level tool. Let's open this up on a 5-minute candle. What I will do is I will change this to a 1 minute or a 2 minute, because you're going to see more action, you're going to see more play, and you're going to see more support and resistance. So at 330, how many resistance, how many support levels do we see? So first of all, let's map out 330, 50%. Let's hit that there. In pre-market, how many times did it hit that level? 1, 2, 3, 4, 5, 6. 6 times in pre-market. So that's a level that must be respected on the cash open. And here we have it here. 1, 2, 3, 4, 5, and almost 6 times during the cash open. So 330.50, that's a good level to be taking your profits. On the short side, you're shorting because you're watching it come back up. You know it's going to come back down because these are gravity points, Fibonacci extensions, Fibonacci retracements, price level, support and resistance. These are gravity points where the stock, I'm not saying it has to go there, but about 95 to 98% of the time, these are positions, these are gravity points where the stock levitates, goes up, goes down, ebbs and flows. So as an intraday trader, you're looking at taking a short position. You want to be getting out here at the 50% level. And then you see the bottoming out point here where it bottomed out twice, 1, 2 times right here. That's the 78% level right there to take more profits. So take half off the table at 50%. Then you got another 20% right here. Then you got another further 50% on the 78.6% level right there. And that would have been a great short for you. So let's come over here. Let's remove that drawing. Let's remove that tool right there, the price action tool. And then we can do Fibonacci extensions now from a low to a high to a low. So we do it from a low. Let me change the tool here. Toolbar is not working. So we come over to Fibonacci extensions. So let's do this really quick. From a low to a high to another low, which would be right around here. Now we are going long. So you want to be taking a long position. So you want to be looking at, I mean, I can do this from any particular point. So going long now you see where Fibonacci extensions are going to take you. So what's the 50%? So let's make a move right from over here. So from here to here to here, from your 0 point, your 0 point is 331.16. On an intraday basis, you want to be going long on this position right here. Where's your 50% is 332.89, just under the 335 point that we were talking about before. So 335, remember 335 from earlier on in the video, right? Look at that level right there, right? So let me break this out from the 335.30, I believe it was, that we were talking about. Close enough. So as an intraday momentum trader or a scalper, Here's 50% right here. You made that tremendous move from 331 up to 332. That's a scalp. You have now what's considered mid-level consolidation, and then Microsoft takes off. So you're looking still in that trade as an intraday momentum type of a trader. You're walking it up 78.6%. You're taking profit. You're taking profit right there. There's a top of the ceiling right there, because you got resistance right here, right here, right here, right here, all the way through before it makes another leg up and breaks out. But you're, as an intraday momentum trader, you're taking your profits 100% right there. And if you want to let the rest ride, you're letting the rest ride up to 335.31, which is now 100, which is now, let's see, just do the math on this, 100%. This would be 120% profit right there, taking that move. Then you have what's considered right here is high level consolidation right there. So Microsoft's trying to figure out what to do. It's taking a breather. You see the two sell side candles right here, because it made this monster move all the way from 331 all the way up to 335 or all the way up to 330, 335, 335.90 or 336, made that monster. And that's a big move for Microsoft. That's a $334 stock. And then it makes this final leg up here to 336 before it starts to fail again. So as a support and resistance, you can see as a support and resistance as an intraday momentum, the momentum on Microsoft died out right there after it hit the high, because after it hit the high on the momentum, it just started fizzling. It just started fizzling out. So that means the momentum is dead. The trend is still intact because it's still an upward trend, but the momentum now is broken. So what breaks first, momentum or trend? Well, momentum breaks first, then trend. We're still in an upward trajectory with Microsoft, but the momentum is fizzled out and dropped. So there you have it, with support and resistance for a long-term investor, as a trend trader, as a position trade, as an intraday momentum type of a trade. You've got all the levels and what to look for and how to use the tools to let you gauge what to do in every instance, whether you're a long-term investor, whether you're a trend trader, whether you're a position trader, or whether you're an intraday momentum type of a trader. And even a scalper, you've seen how we scalp, right? So that was on the 2 minute time frame for today. So you have to understand your time frames. We could do this on a daily. So let me come over here and I'll do this on a daily for you. And on the daily, it would be the same philosophy, the same theory. Look at the run up, right? Using Fibonacci extensions, Fibonacci retracements. It would be very good for you to be doing that as a day trader or a position type of a trader. So that being said, I hope you enjoyed this support and resistance. My name is Double P. I'll see you in the next tutorial. Take care, everybody.